All right. Okay, so good morning, good afternoon, good evening to you all, ladies and gentlemen. Like I said, today is Monday, right? And we are duly prepared for business. On Mondays like this, we see all parts of the world, or in most parts of the world, Monday becomes a very busy day so far as corporate world is concerned. People going up and down to ensure they can be able to make something for the day and for the week. And it is believed that if you don't have a fruitful Monday, your the rest of the days will be somehow. Right? That is just a perception. Though I don't believe that, but I believe Monday is also another day. And we just like we value other days, we must also value Monday and give equal opportunities to it. So today is Monday, and we've started with our session. This morning we started with introduction to technical analysis led by Coach Mo. And this session too is going to be very smooth session that is called trade settings. So this is where we are going to take time to break down the sessions, especially when it comes to the fundamentals of our business. After you being able to get signals, what do? You need to set up the trade, and before you can set up a trade, you need to first know how to set up a trade. So this session is mostly hosted on every Monday morning, that is 7 o'clock Ghana time. Monday morning, 7 o'clock Ghana time. And I believe that may be 10 o'clock East African time, as well as 8 o'clock West African time, that is Nigerian to be precise. So please, let's all get prepared. Let's start. I'm going to share my screen, and by God's grace, so far we are seeing different waves in the market, and I would say this is a sign of progress, right? This is a sign of progress, and we should keep going. We should keep moving because we are unlimited in our ways, and we are inadequate, right? We can still do something great. Now, just recent, that was 3 days ago. We saw Bitcoin having its new all-time high, surpassing the previous all-time high. So, which simply means presently Bitcoin keeps breaking a new high, and that is what we mean by that is how the trend goes. So we may see that most of the coins may be breaking a new time high, like Ethereum, maybe Solana for Solana. Previously, I think 4 or 6 months ago, it broke a new all-time which went to around 280 US dollars, and we are still waiting for it to release back again. We are waiting for it to have its normal price back, and then also obtain a new all-time high. So we are still waiting for Solana, but then we've seen Ethereum having a new all-time high, and then also presently Bitcoin having a new all-time high. Guys, all these are messages to communicate to traders that the market is doing good. This morning, when I wake up, I took time to analyze gold, and I realized that gold too is having a new all-time high. And all these are languages to be spoken to traders that when such markets rises in momentum of such, it tells the trader that good things and fortunes are coming in the market, and this is the time for us to brace up for opportunities because we are unlimited, especially so far as crypto is concerned. There are going to be too much income flow that is going to be in the crypto market, and that is really going to help traders to be able to make more money. So let's keep moving, right? Because there are a lot of opportunities ahead of us. Now, the thing is that either the market rise or fall, we have the opportunity to be able to make profits. But then it's also an opportunity because a lot of people that are holding assets with the expectation that the market could have 10x, 5x, 2x, 20x and stuff. This is the opportunity. Just exercise patience a little bit, and you just wake up to realize that one of your assets is having maybe 50x, 20x or 10x. Yes, it wouldn't just happen in a day. It will be in peak. That is how the market works, right? The market moves in waves and also in peaks. It takes a little peak, then it's have a pullback, then it goes back again, it rises back again, it takes a new all-time high, then it gets back again. That is how the market works. So we should exercise patience and observe whilst we keep trading. We face challenges, we go through all the challenges that is in the market, yet we keep growing all the time, right? So guys, I believe we are well prepared for this session that happens to be trade settings, and I'm going to share my screen. If I'm very loud and clear, you give me one in the chat to know if I'm very loud and clear. You give me one in the chat to know if I'm very loud and clear. Give me one and let me know if I'm loud and clear.
Yeah, I can hear you, bro.
All right. Okay, so off your screen, off your video. Yeah, you can off your
Yeah,
video.
I did.
Mm. So let me see if I can get two, three people to make them co-host to assist me in case I fall out of the meeting. So before I share my screen, get two people to be my co-host. Okay, so um fabulous, fabulous V. You'll be my co-host today, right? Yes, you'll be my co. Who do you want to be my co-host? Who do you want to be my co-host? Okay. All right. All right. So um all right, let's proceed. So let me share my screen. Let me share my screen now. The first RoyalQ is concerned, there are two major trading that we do talk about all the time. And this morning meeting, what I'm going to do is I don't want to keep long here, but then okay. I believe my screen is visible. You can see my screen. I believe my screen is visible. You can see my screen, right? Now, over here, we are doing focusing on two main forms of trading here. That is the sports trading and then also the futures trading. The sports trading and then the futures trading, right? Now, it is important for every trader to understand that so far as you are using RoyalQ to trade, you need to be familiar with how to set up a trade on the sports market and then also on the futures market. Mm. These are the two forms of market that we deal with. So we deal with the sports and then the futures markets, and you should be familiar with how to work on both the spot market and then on the futures market. Basically, I'll take time to talk something briefly about the spot markets. When it comes to the spot markets, and before I proceed, I would want you to know that in this particular session, I'm not going to give a specific strategy. Pay attention to this. I'm not going to give a specific, but I'm going to teach you how you can create your own strategy. And what you need to know is that when it comes to trading, there is nothing like a fixed formula. mm, A fixed formula. That is the reason why one golden rule in trading is always stick to your strategy, because there is nothing like a fixed formula in trading. Okay, so if you get a good teacher does not teaches you what is the best, but a good teacher teaches you how to create what may be best, right? So you must always be able to advance yourself and then also create, be creative. That is the idea. You need to be creative, and before you can be creative, you need to be taught on the principles of being creative, right? So in most of my sessions, I teach concepts that can give you more room to reason. Okay, so I term it as what, thinking outside the box or thinking without the box. I don't need to stick you in the box. You need to think outside the box or think without the box. That is what can help you to be a good trader, right? So when it comes to spot trading, both sports trading and futures trading, um, there are only slight difference between the sports and the futures trading when it comes to trade settings on the RoyalQ app. And if it's happening that I'm speeding up or wrapping, let me know so that I can slow down the session or the lesson for you, right? Because I'm here because of you. Now, when it comes to spot trading, basically we have the basic idea about spot trading, that it's about buying assets at a lower price and then also selling it at a what? Buying low, selling high. That is the idea of trading on the spot market. So if you are trading on the spot market, all your mission is to focus on one-sided market where you buy assets at a lower price, and then also when the price goes high, you sell it to make what? You make profits. Now, this is the basic concept of spot trading. So every spot trader have the focus of every spot trader have the focus of buying assets in order to make profits. Now, this profit making is based on how the assets rises. This simply means when an asset drops in value, it's highly difficult for traders to make profits. But over here on the spot trading using RoyalQ, what makes it so different as compared to normal forms of trading is how traders can also strategize to be able to enable them make profits as they expect the market to rise, yet the market goes down against them. So if we buy an asset at a lower price and still the price keeps going low, that is where we need to understand how to feature our trade, how to set up, how to configure the bots to our advantage to ensure that we can be able to regulate and make more profits, right? So over here, without wasting my time, as I've explained what do you mean by the spot trading, buying low, selling high, we will go on RoyalQ to demonstrate how we can set up a trade on RoyalQ in brief and simple manner. Okay, first, before you can set up a trade on RoyalQ, the first thing that a trader must come in your mind is first your capital. So you can never decide to set up a trade on RoyalQ, or you can never decide to set up a trade when you don't even know the total capital to be used in trading. Okay, the total capital to be used in trading. So always before you decide to set up a trade, first ask yourself how much capital am I willing to expose to a trade? How much capital am I willing to expose or invest? Either exposing or invest, anyhow you term it. How much capital am I willing to expose or invest in a trade? Which simply means anytime we buy an asset, we've made an investment, right? So trading is another form of investment, but this form of investment is different from all forms of investment. So you must be able to ask yourself, how much am I willing to expose to a single trade in total? Now, if I'm willing to expose $50 to a single trade, now I need to ask myself, how much am I willing to be exposing it with time? Because trading deals with time, trading changes with time, the market moves with time, right? So anytime I want to trade a particular asset, the next question I do ask myself, or you need to ask yourself, is how much am I willing to expose or invest in one single asset? That is the first thing. Second, how much capital am I willing to expose with time? I don't know if the message stick home. Are you with me? Are you with me? Are you with me? Let me know
Yeah,
if you are with me.
with you. With you.
Very good. Very good. So before you think of trading, you can never just jump because you've seen a signal and you want to trade a signal. Anytime you wake up, the first thing that has to come in your mind is one, how much capital do I have in my account? How many assets do I want to trade in a day? That is the first thing. That is what, in other words, traders choose to call it your trading journal. Okay? Hmm? Is the spelling right? Your journal. So you choose to set up everything, write up everything down before you even think of exposing money. So if I want to expose money to a trade, first I need to estimate the capital that I have and how much I'm willing to invest per asset, right? Now that I know the amount of money to invest per asset, I need to have the confidence of asking myself, how much am I willing to expose with time to each trade? So let's assume I have $500. Hmm? Let's assume I have $500. $500. Now with this $500, I choose to ask myself, how many trade do I want to trade with this $500? Now it is your money. It is not anyone's money. But then you also need to inquire if you don't know. That is the reason why knowledge is important. Okay, maybe I want to use all this $500 to invest in one single asset. What is my reason? I want to invest in this single asset because I want to make my profit to come out from all one asset. I don't want to be spreading everything evenly. That may be one. Maybe I want to invest in multiple assets so that even if it happens that other assets misbehave, I may be able to get something from other assets. So in this case, in my book, I choose to write today I'll be trading on three different assets with this my $500 capital. So with this $500 capital, with your personal idea, understanding and conviction, belief and perception. Listen, with your personal idea and understanding, belief and perception, and with your own conviction, you've agreed to yourself, you've understood that you are going to trade on three assets. You are not cheating anyone. You are not cheating on anyone. Listen. So now this $500, now you now decide, okay, maybe I want to trade $200 each and then $100 to go. So this is it. Or I want to have an equal dispensing, right? So which is $500 divided by 3. That is going to give you how much? Let's use our calculator. $500 divided by 3. We are not creating any strategy here. Listen, we are not creating any strategy. 500 divided by 3. 500 divided by 3 will give you 160, right? 166. So let's assume 166. Okay. So over here, I know that today, per asset that I want to trade, all the three assets that I want to trade, I want to expose $160 to each asset. I want to expose $160 to each asset. Now that I want to expose $160 to each asset, now I have to come. First, now listen, we are talking as if you are a real-time trader who knows exactly what he is doing. So you know you want to trade three assets today. Okay, right? With each asset exposing $160 capital. So 160 times 3, that is going to give you your total amount of money, or 166. However, anyhow you want it to be. So 166, which simply means today you've decided that I'm going to trade on three different assets, and all these three different assets, I'm going to expose $160 as my form of, or $166 as my form of what? Investment. As my form of what? Investment. So today you have your investment decision. You've set up everything. Your strategy is to ensure that one, you go in the market with $160 per asset, not capital but per asset. You are investing $160. Now, why are you doing this? At the end of the day, you understand the market, you know the waves that happens in the market, and you know if it happens that all these three trades couldn't work, if one couldn't work, maybe I may get profits from one. Now that you are done with this, the next decision that has to be in mind is, now I want to trade three different assets. Which asset do I want to trade? Right? Which asset do I want to trade? So the next thing that you have to come, now you've decided, okay, maybe I want to trade maybe Solana. Maybe I want to trade on Jelly Jelly, and then also H bar. So make just mention those assets that you want to trade. Now that I'm done with that, the next thing I have to come, okay, if I want to trade BTC, now how much capital? So you said you want to trade BTC with $166. 166 what? Dollars. So you want to trade with 166. $166. So in this case, your idea of trading today with BTC, you want to expose $166. So if you want to expose $166, then you now come to your RoyalQ. So it simply means today on each pair of trade that you take, you are going to expose $166. And how do you start the exposing? You are not going to use all the money at the go. You know that per coin you are trading with $166. And with this, the next thing that you have to do is to ask yourself, how many times? That is where we talk about the times. Okay, so how many times do I want to be exposing my capital until all these $166 get finished? So that is what we are going to do today. That is what we are going to do today. That is what we are going to do today. So now that I have my $166, the number of times I want to be exposing this money to the market. Okay, the number of times I want to be exposing this money to the market before all this $166 gets finished. That is what we are going to do. Now, why am I doing this? Because I know that on the spot market or on the futures market does not always go according to my trend. Even though on the spot market, I'm buying low to sell high, but we said market can still go against you. Instead of you going to this direction, it can go in this direction. You want to go up and it can go down. Even though you bought it at the lowest price, and yet it still keeps going on to the lowest point of its lowest, the dip of the deepest, right? So it keeps drawing low and lower, and your responsibility is to ensure that you can use this $166 to control things that happens in the market until you don't have any capital again. Give me one in the chat if you are following. Give me one in the chat to see if you are following. Give me one in the chat to see if you are following. Give me one in the chat to see if you are following. Okay, so now we may proceed to our bot without wasting my time. Okay, good. You are following. That's good. That is awesome. Okay, so now let's go to RoyalQ. Let's go to RoyalQ. Okay, so we have our RoyalQ here. Where is it? Okay, so this is RoyalQ, right? Let's tap on it nicely as we wait for it to open. Very good. Now, as we wait for RoyalQ, it's open. And over here, the first thing that I want you to do before you set up your trade is to come here. We have manage. Manage. We have what we call manage. Just tap on manage. When you tap on manage, you have spots and futures. Spots and futures. Make sure you've added all the coins that you need to add. Okay, so click on all. Sorry, click on spots first and then click on all. If you've added all the cryptocurrencies in your RoyalQ account, when you click on all, nothing would appear. But if not, it will appear. Then you click on what? Add. Then you click on add. Now do the same thing to futures, to click on all and then click on what? Add. Right? So I believe you can see that and you do that. So now after you are done with that, now you proceed, you go to sports. That is where you want to trade. So let's go back home. Now on home we have what you call the sports and then futures. Sports and then futures. So if you are a sport trader, when you want to search for an asset, first you place your template on what? On sports. Down you use the search bar. Use the search bar. So this is the search bar. Now that I'm searching for sports trade or sports assets, I click on search. Then I search for the name of the asset. Maybe I want to trade on, let's say, BTC. So I search for BTC, right? Maybe I want to trade on Solana. I search for Solana, so SOL. Now I click on what? I click on it nicely. Now, after clicking on it, read this. Listen, read this. There are some of you that you don't like reading. There are some of you don't like reading. They said risk warning. Cryptocurrencies trading carries high market risk. Please trade cautiously and assess your risk tolerance. RoyalQ does not guarantee profit or bear responsibility for trading losses. Listen to this. RoyalQ does not guarantee profit or bear responsibility for losses. So there are some of you, you don't read this now. When you first challenge, you come and RoyalQ has done this, RoyalQ has, before you trade, they've given you the caution that RoyalQ does not guarantee profit or bear responsibility for trading losses, right? Which simply means every single profit you make is based on your personal decision, right? Whilst you keep using the bots, the strategies of the bots. So you are to make good decisions, strategize the bot to trade. That is the reason why we call it trade settings. So RoyalQ is a bot that helps you to trade to make profits. Now, in as much as you are to make profits, RoyalQ does not generate or guarantee profits in by itself. It is the market that guarantee profits or that generates profit for traders. And RoyalQ only follows the parameters or the setup given to the bot, right? Now, once you can do that, you can enjoy the bot without any complications or stress. That is the reason why we are discussing about trade settings this morning. Okay, now after you are done, just click on I understand because you've agreed to what they are saying. You've agreed to what they are saying. Now, after you are done with that, maybe you are such a person who would prefer to analyze signals using RoyalQ, then this chart is meant for you. If not, if maybe you've done your analysis already, then the next thing that you have to click on is to click on create. We have create, so just click on what create. Now, when you click on create, we have martingale strategy bots and then also grade bots. Martingale strategy bots and then grade bots. When we talk of martingale, now at your own free time, you can go on either Google, Chrome, or maybe ChatGPT to ask to want to know more about martingale. Now, martingale mostly follows what we call mathematical models, and it helps traders, okay, to win trade as more as the market goes against them. So in gaming, we have what we call the triple effect, okay, the triple effect. So let's assume I go into the market with $1. Now, the market goes against me and I lose that dollar. If I want to get my dollar back, I have to triple the effect with $3. If I do that and I'm able to win the profits, I'll be able to get back my $1 plus profit back. So in all, maybe $4 plus $2 profit, making $6. Now, should it happen that this $1 goes against me, this three, and then this $3 also goes into the market, now I can also go into the market with another $9, making how much? How much? Making $13 in all. Making $13 in all. So if it happens that I'm able to win back all the profit because of this money, it simply means the more money I add to the market, the more my returns. That is the martingale strategy. The more money I add to the market, the more my returns. So should it be the case? Should it be the case that let's assume I set up a trade, we know that the market moves in waves. Maybe this is the trend. Now this is a trend. This is a trend. So now I started from this origin. Coming here, the market goes against me, it drops below here. Now it went up again, then it drops below here. Which simply means the more I will be buying, the more I'll be able to make profits. The more I'll be buying, the more I'll be able to do what? Make more profit. So if I will understand the concept of buying low and selling high, buying low, selling high, buying low, selling high, I will be able to make extra profit on my trades. That is the martingale strategy. That is the martingale what? The martingale strategy. And then we also have the grade bots. We also have the grade what? The grade bots. When it comes to the grade bots also applies two main strategy. That is called um the arithmetic and then also the geometric what strategy. The arithmetic and then the geometric strategy, which also applies mostly in sideways market. So over here, just get back here, we are going to focus on martingale strategy. we are going to focus on martingale strategy. And basically, if you want to know more about the great boats, like I said in the bear market, you shall use the great boat to trade to make more profit. And it's mostly followed what you call the sideways market, and it's very profitable as well. It's very profitable as well. So not only do we use martingale, we use both martingale strategy and then also great bots. We use both martingale strategy and then what great bot. So focus on the on the martingale for now. Click on create. So create. Now after clicking on create, the same warning has been given to you again. The same warning has been given to you. That is caution. So they said RoyalQ does not guarantee profit. So profit is not guaranteed here that automatically you are going to make profit. Pay attention to this because it is cherished and very important. Profit is not 100% guaranteed in trading, which simply means in trading there are sometimes losses, right? But in the sports market, we've said that when it comes to sport trading incur low losses. Okay, the losses in the spot market is very low, and even we can boldly say there are no losses, just that the market follows the trend of going lower and lower, low. So if the market can easily go down, down against your trend or against the price that you bought the asset. And when it happens, so all what you could do is to exercise patience and then do what? And then wait. That is the definition of trading on the spot market. That is the definition of trading on the spot market. So it's a caution they've given to you. So click on I understand. Click on what I understand. When you click on I understand, below we have what we call trade settings. Trade settings. But before we talk about the trade settings, let me use opportunity to talk about some of these few things where we may meet them during the trade settings process. So over here, we are seeing a lot of things here. We have position amount, we have average price, we have call drop, we have position size, position quantity, current price, and then also unrealized P and L, about six of them. One, two, three, four, five, six. And we also have one shot. We also have sell, we have buy, we have strategy mode, initial buy in price. All these things sometimes traders do ask, what does it mean? What does it mean? I've been here for a while. I don't understand what these things mean. So in trade settings, I guess we have to take time to explain these things to traders. Let me know if my traders are following. 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 Very good. Very good. That is awesome. That is awesome. Good. Very good. Very good. So let's proceed. Let's proceed. Now, when we get back to what we are doing, before you set up the trade, let me take few time to explain all these terms here. And some of these terms, both on futures and on spots, you may see them. Both on spots and then on futures, you may see them. So first, we see what we call position amount. Position amount, PA. This is a position amount. Now, when we talk of position amount, that is the amount of money, the amount of money exposed to the market at the moment. Amount of money exposed to the market. So let's assume you have $1,000, and out of the $1,000, $500 is in the market trading. It's reflected as your position what amount. Either it's a borrowed money or an actual money. It's called position amount. So on sports trading, when we talk of position amount, your actual money you are using to trade is what you see it as the position amount. In futures trade, when you talk of position amount, the money that you are using to trade based on your leverage is what we call it the position amount. So if someone is having $10 and is using 10x, 10 times 10 will give you 100. So 100 will be your position amount. 100 will be your position amount. So if you see 10 here, the 10 is your position amount, which is a multiplication of your leverage. and we'll get there. So after you seeing the position amount, the next thing that you need to be familiar is average price. Now when we talk of average price, anytime you buy an asset, if you buy an asset, or when you buy an asset, let's say at a price of $10, let me use this, at a cost of let's say $10. Now the asset is being sold at $10 presently. That price at which you bought the asset becomes the average price. The average price. So the price at which you bought your asset presently is what we term it as well the average price. And then we also have what we call the margin call counts. The margin call counts. When we talk of the margin call counts, that is the amount of money or the number of times the trader decides to be buying the asset over time. Okay, so let's assume you have $1,000 again, and with this $1,000, you would prefer to be buying $2, 20 more times. Okay, 20 more times. Maybe you bought 5 times out of the 20 times. So the 5 times that you bought the asset, it will reflect here as your margin call count. So the more it buys, the more it add up to your margin call count. Then we also have the position quantity. Position quantity. When we talk of position quantity, every single asset we trade in cryptocurrencies have a quantity. Okay, so for instance, we said 1 BTC. Okay, 1 BTC. Now 1 BTC is equivalent to presently 125, let's assume 125,000 US dollars. So 125 USDT, 125 is it 125? 125,000 USDT is equivalent to 1 BTC. So the quantity of BTC is 1. So if I'm trading with 1 BTC, 125,000 Bitcoin, I mean 1 Bitcoin. So the position quantity is 1, right? So if I talk of Solana, the quantity of Solana that I'm trading would reflect here. Then you come to the current price. That is the present price of the what of Solana. If Solana is being sold at $10 presently, I'll see it at $10. So the average price I bought it at is $10, and then the current price of Solana 2 is maybe $11 or $12. Then that is the current price. Then we have the unrealized P and L. Automatically, when we talk of P and L, we mean profit and loss. Profit and loss. Mind you, we said RoyalQ does not guarantee profits. So we have both profits and then loss. So if it is in profit, you see green here. If it is in loss, you see red. That is all what it means by profit and loss. If it is in green, you see profit, it's profit. If it is in red, it is loss. So if it is red, you see negative. If it is in green too, you see positive. Or sometimes you wouldn't see the positive sign. They are all indication that a trader is in either profit or loss. Let me know if the message is home. Let me know if the message is home. Are you following? Are you following? Are you following? We are now jumping to the actual trade settings itself. Are you following? We are now jumping to the actual trade settings itself. Are you following? All right. Very good. Very good. Someone say not clear. Which of them is not clear here? Which of them is not clear here? Which of them is not clear here? My brother, which of them is not clear here? Come again for me to know which of them is not clear. Come again for me to know which of them that is not clear based on what I've talked about so far. All right, so now let's proceed. Okay, now the next thing that you have to do, now you've understood all these concepts here. That was just by the way, right? We also have what we call one shot, sell, and then buy. Now, when we talk of one shot, we have two strategies here. We have one shot and also cycle. One shot and cycle. So it's either a trader chooses one shot or cycle. Now, when we talk of one shot, at a point in time, when we set up a trade, you prefer to get back and make your next decision by yourself. So when you set up a trade to one shot, it simply means when a trade is sold out of the market, you want it to hold on. You want it to hold on to expect your personal decision, to expect your next decision, right? And then also when you set it to cycle, when you set a trade to cycle, it simply means you want the trade to keep on going in the market over time without your personal concern, without your personal concern. So that cycle would follow the same process over time before you yourself you decided, okay, for now I'm okay, right? We also have sell here and then buy. Now these two cells, sell and buy, are used to operate what we call manual sell. So if you are the type you want to sell the trade manually, maybe the market is going against you, or you are in too much profit, you want to close the trade and the both hasn't yet triggered your actual profits, you still want to close it, you come to sell. You come to a sell. So on the spot you see sell, but on futures you see close. On futures you see close, on spot you see sell. Pay attention to that. On futures you see close, on spot you see sell. And then also we also have the buy. Now if you want to buy more by using freehand, you just use the buying tool to do that. Now that is it. So the next thing that we have to do, let's click on trade settings. Let's click on trade settings and proceed. So trade settings. Now when it comes to trade settings, we have basically two: the smart create and then manually create. You have smart create and then manually create. Now when we talk of smart create, that is, it comes with default setup. Okay, default setup, right? So the smart create comes with default what setup of the robot. So and then you also have the manually create. Now the manually create simply means you have the opportunity to create your own strategy. You have the opportunity to create your own what? Your own strategy. So let's look at the two. First, let's look at the default setup, right? Then we also look at this manually create. Okay, are you following? Are you following? All right. All right, very good. Okay, so let's look at the first one. Let me see if the audience are with me. Okay. All right, let's proceed. Let's proceed. So let's proceed. Now, smart create. When it comes to smart create, we have the default setup, right? The default setup. So let's click on margin call parameters. Margin call parameters. So when it come here, you may see that everything is default. Okay, everything is what is default. So right from your margin call drop, from your margin call drop to the buying amount to be used, everything is default, right? So over here it will base on your capital, and the honest truth is you may not have this capital here. Okay, 1,500 and 36 USDT, 768, 384, 192. You may not have this, right? So it's easy to use the manually create, right? It's easy to do what? To use the manually create. And using the manually create would do what? Would help you. Using the manually create would do what? Would help you. So you see over here they said enter parameters here. So if you want to enter your personal parameters, then you proceed with manually what? Manually create. Once you click on that, It will lead you to manually create. So you proceed, manually create. So when it comes to manually create, that is, you have the opportunity to create your own what, your own strategy or your own setup. You have the opportunity to create your own strategy or your own setup. So what do you have to do next? Now we have parameters, right? We have what we call parameters. So now over here we have first margin call limits, right? First we have our strategy mode. We talk about that. We have the first buy in amount. The first buy in amount. Now, mind you, we discussed that maybe I want to trade with $166, 166 or $160. Now, with this $160, the idea is I'm not going to trade all of a sudden going to expose all the $160 into the market. Why? Because I know the market moves in waves. It goes up, it comes down, it goes up, it comes down, it goes up very low, then it comes back again, right? So in this case, I want to strategize my capital such that I wouldn't expose all this $160 as my FBA, first buy in amount. So when you talk of first buy in amount, that's where mostly you see FBA. So when you talk of first buy in amount, that is the amount of money you are willing to expose to this market at a point in time. The amount of money you are willing to expose to this market at a point in time. So mind you, over here it should be your personal decision, right? It should be your personal decision. If you decide to go in this market with all the $160, that is up to you. But the thing is that if you are going in the market, you need to understand that anytime I'm going in this market, the market will surely go against me before I win. We fail before we win. That is the rule. So if I am to enter into this market, I need to know how to strategize my capital so that at the end of the day, should it be the case that the market goes against me, I wouldn't just tag in the market without earning any profits. Why? And the question is, if the market goes against you, will you be making profits? On the spot market, we will say yes, because if the market goes against you, and on futures market, we will say yes, because if the market goes against you and you've been able to strategize your capital to be buying lower, lower, low, it will help you to be making profit with time. So with our $160, what we are going to do is simple. We will have a defined strategy. Okay, we will have a defined strategy to ensure that we can be able to win. Maybe I'm the type, I'm too greedy. So I want to be making profits in the market all the time. I decided, okay, I'm the type, I'm not too greedy. I want to make profits and then also maximize profits as the market goes against. So I want to just expose just $20 of my capital, 20% of my capital. So if I want to expose 20%, maybe I want to expose 40%. It's all about exposure. It's all about what? Exposure. Maybe I want to expose 50% of my capital. Maybe I want to expose 60%. Now, mind you, the total capital is 160. $160. Out of the $160, you are deciding on the percentages to go in the market as your first buy in amount. As your first buy in what? Buy in amount. Right? So in this case, you are deciding. It should be your personal decision. There is no way an investment can be made easy than that form of investment where you are capable of making personal decision. That is what we mean by investment. You are an investor. You need to think critically. Why do I want to expose 20%? Why do I want to expose 40%? Why do I want to expose 50%? Or why should I expose 60% of the capital? More so, if I am to expose 20%, why? Because I know within 20% to 40%, I am capable of making profits, and also I may have good capital in return. If the market should go against me, I may have good capital to be buying against the market that is going against me, which is the dip. So let's assume you want to use 20% of your capital. So out of the $60, 160, we take a calculator, come here, um $160, right, times 20%, that is going to give us $32. $32. So you come here, We know that your first buying amount is going to be 32. 32. Now, out of the $32, how much is it remaining so far? So let's see, 160 minus 32. We have 127. Okay, 127 remaining. 127. That is our remaining capital. We have 127 remaining. So over here, we just get back to this thing. Now we have what we called they said parameter settings. Parameter settings. So 90% of your trading using these bots has to do with your parameters. Okay, how to configure these parameters. Configure this what parameters. So over here, the simple rule is your parameters. How do you configure it? So first, we get back to the margin call limit. When we talk of margin call limit, the number of times I want to utilize the 127, is this how much was it remaining? $128, right? The $128 that I have, how many times do I want to be exposing it to the market? So initially, we talk about exposure. Capital exposure, right? So if I have $120, how many times do I want to be exposing this money into the markets? This is spot trading. How many times? And it's still applicable in futures. How many times do I want to be exposing this remaining balance into the market? Right? Now, before you decide on the number of times to be exposing this money into the market, there is one question you need to ask yourself. First, the asset you are trading on. Look, listen, you cannot just wake up to say that this is a strategy for all assets. Listen to me. Take this. You cannot just wake up to say this is a strategy for all assets. Why? Because every single asset we trade has momentum of falling and rising. So if you want to be a good trader, we don't just set up a fixed formula to say that, okay, this is the strategy that I'm using to trade all assets. Just imagine you are trading this asset called Jelly Jelly and then BTC. The depth at which BTC used to fall and the depth at which Jelly Jelly used to fall, are they the same? Give me the answer in the chat. Are they the same? Give me the answer in the chat. The depth at which Jelly Jelly fall and then the depth at which the BTC drops, are they the same? Are they the same? Give me the answer in the chat. Are they the same? Are they the same? So you see, it will be very wrong to think this strategy is meant for all assets. Do you get it? It will be very wrong to think that this strategy is meant for all assets. That is the reason I'm telling you that over here, I'm not teaching you the best working strategy, but I'm teaching you, I'm opening the mind. Okay, I'm opening the mind, the eyes of your mind to see, so that you can be able to make good decisions anytime you meet a good trade, right? So that you can be able to open up to make good decisions anytime you see a good trade or an asset. Gone were the days where you used to think that, okay, I have this strategy, so that is what I'm using to trade and earn profit on all assets. Now you are a good trader, you are growing into becoming a mature trader, a professional trader. So there are some of the skills, some of the secrets, I no longer hide them to you. I show them and give you the evidence, right? So let's assume I have $128 as my remaining capital. I'm trading on BTC and then Jelly Jelly. The depth at which I have to expose this money should be too wide as compared to BTC, because BTC does not easily drop very so high or too deep as compared to Jelly Jelly. Which simply means if I am to trade BTC now and I go for 5 margin calls, I shouldn't expect to open the same 5 margin calls on Jelly Jelly. I don't know if I'm making sense. I don't know if I'm making sense. If I'm opening 5 margin calls on BTC, I shouldn't expect to open the same margin calls on Jelly Jelly. So now, the case of setting up a fixed strategy to think this strategy is meant for all, where does it come from? Right? So as a trader, you need to be creative all the time. Once you get hold of an asset, you need to know your next decision. Are you learning? Are you learning? Do you get it? Right. Let's proceed. Very good. So it is very fair. So let's assume now the next thing, you decide on the margin calls based on the assets. So I want you to know the margin call shouldn't even be a fixed formula for all assets. You decide on the margin calls based on the assets, right? So maybe I want to trade on BTC, then I proceed, I change my first buy amount to maybe $10, 10 or 5. Now 10, I have this asset here, I want to buy 10 margin calls. It simply means this particular capital, this $128 that is remaining, I want to utilize and buy 10 more of it, 10 more if it happens that the asset drops. If it happens that that particular asset called BTC, if it drops below, I want to utilize this capital by buying 10 more times of this $120. By buying 10 more times of this $120. Now, the next thing I have to come is to check my take profit. Now, the take profit will be based, listen, except you are taking signals, the take profit will be given. If not, the take profit will be based on how you've analyzed the asset. The take profit will be based on how you've analyzed the assets. So always those who question about take profit, if you want to know how take profit works, where is it? You take your trading view app. When you go to trading view, you have your tool to measure, and with your tool to measure, you would easily assess and then also measure a particular asset, right? So for instance, you get your trading view here, you use your price range. Maybe you want to take a measurement from a particular area, let's say from this key area to the next zone. So you do this. Now it is giving you 7%. It simply means your take profit that you want to take, you want to go for 7%. You saw that here. Didn't you see that here? It is how much? 7%. So you are using your, based on what you've seen here, you are using this, that is the 7% to make your decision, right? So take profit is not based on assumptions. Listen, take profit is not based on assumptions. Pay attention and listen to me. Take profit is not based on what? Assumptions. So you come here, you set up 7%. Why? Because you measure the asset and you know the depth it could rise up to, which is 7%. Right? Now the next thing is you come to your call drop, you change it to 0.1. Now, when you talk of the call drop, we have two call drop. We have the buy in call drop, and then also start position take profit call back, right? So sorry, the callbacks. So when you talk of the callback for take profit, that is when the assets rise to a percentage of 7% and it drops to 0.1%, you want this trade to be triggered for what? For profit. So when the asset rise to 7%, right, and then also have a drop of 0.1%, you want your take profit to be triggered. That is the meaning of the take profit callback, right? So over here 0.1, then the next one to 0.1, then the next one we have 0.1. Now if you have this here, the next thing that you can choose to click on is what? Is your advanced settings. So you click on advanced settings. On advanced settings, we are only going to touch this. We are only going to touch this here. We're only going to touch this here. We're not going to touch plenty things here, just one. So we have this one here, the trigger, the cycle, right? So we have cycle and then also the trigger price. So always let it be on trigger price. Now there are two forms of settings. We have the preset and then the trigger. right? We have the preset price and then the trigger price. So when we talk of preset price, as the name itself define, that is to say, if an asset, let's say, is traded at $10 and you want it to drop to maybe $5 before you trade, $5 now becomes your preset price. But if you are using the trigger price, that is, you're talking about the current price. Okay, so immediately you enter the trade, it will be triggered exactly at $10 because that is the trigger price or the current price of the asset. So over here, come here, just tap on cycle. Now I've explained that cycle and then one shot. So if you want to use cycle, it simply means you want to trade the same asset over time. Okay, you want to trade the same asset over time. If you want to use one shot, you click on one shot. So you change it from cycle to one shot. I've explained that. After that, now you've made your setups. So the next thing that you have to do is your margin configuration. Your margin configuration. So tap on margin configuration. Now, when we talk of the margin configuration, now, mind you, we said you have $128 capital, and you said you want to buy 10 more times of this 128. You said you want to buy 10 more times of this 128. So, over here, the easiest thing you could do is that now ask yourself, we have two things here. We have first the first buy in amount. Sorry, the margin call drop, and then also the multiple buy in ratio. eh, we have the margin call drop and then also the multiple buy-in ratio. When we talk of the margin call drop, that is the total percentage drop. So for instance, this particular asset that we measured, okay, this particular asset we measured here, let's take a look at it. This particular asset we measured here for this 7%. Let's take a look at it. So we've agreed to that. That is 7%. Now, we could also agree that the price could drop. Okay. Now, when it's rising, we are expecting 7%. Let's look at when it drops to. So let's look at it. So we can also use the measuring tool. Now we get below here. So just below it, if it happens that this particular asset drops, what is our target? Okay, so let's assume we've analyzed to say that this particular asset could drop onto the next support here. Listen, don't pay attention to this because I will not take that, I will not explain this. I just want you to understand something. Here. So now looking at this particular trade, very good. Looking at this particular trade, it simply means it would have a total drop of 11%. Now, we are expecting it to rise to 7%, but we've also targeted that when it can also drop up to the support level, which is 11%, right? So in total, we have a percentage drop of 11. So in case we want to get a drop of this particular asset, it simply means we are expecting this total assets to have a total percentage drop of what? Of 11%. Which simply means from the first call to the last call, whatever we are going to do, it should sum up to 11%. Whatever we are going to do, it should sum up to 11%. If you understand that part, give me one in the chat. If you understand, give me one in the chat. I will explain further, but if you understand, give me one in the chat. If you understand, give me one in the chat. Hey, who is saying French? Who is saying French? Someone say 111 with a bat. What is the bat? My brother, what is the bat? Bring the bat. What is the bat? Okay. Said explain again. Said explain again. Now, listen. Now, listen. 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 What we are saying is this. We have percentage drop. Okay. First call. We have the first call, second call, third call, fourth call. Now, all what this simply means is when we add 3.5 plus 4 plus 4.5 plus 5.2 plus 11, sorry, plus 8 plus 10 plus 12, we should get a certain number. And over there, our core drop is giving us 11%. 11%. 11%, which simply means should we add all the values here, we should get 11%, right? Should we add all the values here, we are expected to get 11%. That is the idea. So with that one, how whatever way you want to do it, it depends on you. Be 11%, not less than 11%, because you measured your trade. Here is the trade. Here is the trade. You agree that you want a profit of what? Of 7%. In as much as you want profit of 7%, you also know the market could go against you in a total drop of what? Of 11%. In a total drop of what? 11%. This is the 11. Let me wipe everything off. Let me wipe everything off. Okay, so let me just delete everything. Let me delete everything here. So I'm deleting everything. I'm deleting everything. Now, this is your trade. Okay. Based on your trade, you said, okay, now I'm not looking at any direction. I'm just explaining something to you. You are just using this, your measuring tool. You said, okay, now looking at this particular trade, I want to start, I want to take something small from this profit. So maybe my support line. So when it's starting from this point, when it gets here, once it gets to the first resistance line, I'm expecting to hit a target of how much? 6.9, which is almost 7. 6.9. Now you know that market does not only rise, it also falls. So it could also drop against you. It could also go against you. So in this case, you said, okay, then I'm also expecting a next drop of what? Okay, so let's maintain this first. Okay, so we have it here. Now you are done with that. So the next thing is you also want to make another decision again. You know that the market could drop against you, and your next drop, here is it. So if it happened that it couldn't rise and it falls to, this is your decision. So you come below, maybe it should be on the first support line. Okay, this is your support one. So if it should be here, then it simply means this asset could drop, have a total drop of 9% or 10%. This is the percentage, right? 9%, right? So since it could have a total drop of 9%, you are good to go. So over here, it simply means when you get to your call drop, once you are expecting to make profit of 7%, you are also expecting that this from the first call, second call, third call, fourth call to the seventh call, you are expecting a total drop of 10%. Or whatever drop that you saw there. So how much? Let's see. That is 7. So let's see 10. Okay. So 10%. So it simply means we are expecting that this place over here, all the drops should sum up to what? Should sum up to 10. Should sum up to 10. Now, how do you get the 10? How do you break it down? So in a simple rule, the easiest rule you can use to do this is your total call drop divided by the total margin call limit. So my total margin call limit is 7. 1, look at it. Let's look at our total margin call limit. It's 10. Okay, it's 10, right? So it simply means from the first to the last, we are having 10 call drops. 10 call drops or 10 margin call limits, right? And our percentage drop too is also 10. So in short, if I want to get the value, that is going to give me 10 divided by 10. So the total margin call limit divided by the total call drop, which is 10 by 10, which is going to give me 1. So over here, I can decide. Listen, this should be your personal decision and conviction. I can decide, okay, now from the first to the fourth call, I'm going to make sure it's take up to 5% or 3%. So maybe 0.5. Okay. Then my next call drop, I want to make it 0. Or I want to make it 1. Then the next call drop, I want to make it 0. What? 0.5. And then the fourth drop too, I want to make it 0.5. Which simply means if I should add from the first to the fourth call, if I should add from the first to the fourth call, this is what I'm going to get. If I should add from the first to the fourth call, this is what I'm going to get. So let's look at it. 0.5, let's see, 0.5 plus 1 plus 0.5, that is going to give you 2. It simply means that is going to give you 2. It simply means from the first call, second call, third call, and then are they okay, so fourth call. So let's add that one to 0.5 plus 0.5 plus the next one 0.5. So in this case, from the first to the fourth call, you are getting 2.5 because this is 0.5, this is 1, this is 0.5, this is 0.5. Now why? Because you want the first to the fourth call to be very fast, to be bought very fast for you. So since it's going to be bought very fast, you are good to go. Now you can now decide, okay, now that I know I've bought from the first to the fourth call, I've bought 2.5. It simply means I still have 7.5 remaining. So I can distribute from the fifth to the 10th call the 7.5 evenly. So this does not have a fixed formula. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand, give me one in the chat. Very good. Very good. Very good. Very good. So now I know that over here I have the values here. So I can now decide to distribute the rest of the remaining values onto it. So if I add 2 here, it simply means it's going to remain with 5.5. Maybe I come here, 1, 1, 1. Picking how much? 1, 2, 3, 4. So I still have 3.5 remaining. So I have to come here 1.5 and then the remaining balance is 1 or 1.5, maybe 2. So let's add. If you add from the first, from 2, 1.5, 1, 1, 1, 2, 0.5, 0.5, 1, 0.5, you are expected to get 10 core drop. You are expected to get what? 10 core drop. So from the first to the last, since we measured, our trade is given to us and we measured, we realized that we are going to get 10 core drop. We're expected to do this same here, and everything should is expected to get what? 10 core drops, right? Now the next thing is we have to get back here. We have the money remaining. How much do we have? We have $128 remaining. Mind you, it was 160, and then we used $32 as our first buying amount. So using $32, we had 128 remaining. So it simply means you're going to use the 128 to also buy from the dip, right? So now when it comes to this 128, the next thing that you need to understand is that one too should be your personal decision. Now you will decide, okay, the first time I want to buy, when the asset drops 0.5, how many times do I want to buy here? When it drops 1%, how many times do I want to buy? When it drops 0.5, how many times do I want to buy? When it drops 0.5, how many times do I want to buy? 2, how many times do I want to buy? So you will decide on this aspect to how to go about it. Is the message home? You will decide on this aspect how to do it, how to go about it. So quickly, let me briefly do that, then we proceed. So over here, you can decide on the amount, the number of times to be buying the asset at each drop. You can do it evenly. When I say evenly, maybe you can distribute it accordingly. If you are buying $10, maybe all will be $10, or you can decide to buy higher, low in that order. Now, what does it mean to say you are buying it higher, low? Which simply means this place, the first call drop, you may choose to buy a little bit high. Then the next one, you may reduce the buying amount. Then the next one, you may buy the next to be higher as compared to the first one. So as it goes, you buy it at a higher price. Then the next one, you buy it at a lower price. You buy it at a higher price. Then the next one, you buy it at a lower price. Which simply means at each drop, you decide to increase the amount to be bought or decrease the amount to be bought. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand that, give me one in the chat. So you're asking, what about the multiple buy in ratio? That is what we are talking about. Okay, very good, very good, very good, very good. So let's proceed. Let's proceed. Let's proceed. So over here, I want you to all what I want you to understand is you don't need a fixed formula before you can know that you are doing the right thing. Sometimes you don't need to seek validation, and most people like seeking validation too much. Most people like seeking validation. You are also somebody. You are also what somebody. So the main purpose of this session is not to give you an exact strategy, but is to amplify your thinking and know how and why to make the right decisions for yourself. Hope you are making sense. You are also somebody, so stop seeking validations too much. You can also do things in a better way. You are a special human being, and you can create strategies to be making profits. You don't understand. Eh? I want you to know you are so special, and you should respect your decision and value your decision, right? Good. All right. So now that you are done with this, you know what to do, and you've been able to do all these things quickly. Mind you, you can't use these values because they are higher than your money. Your capital is 128. So you are basing your calculation, you are working out your calculation based on this capital. So it simply means the amount of money, the number of times you want to buy should match the total capital you have here, which is the $128, which is the $128, right? Very good. Now, after you are done with this, you click on confirm. Everything is intact. This shouldn't take you even up to 3 minutes to do this. So everything is intact. You click on save. Now, after clicking on save, just come here and click on confirm. They said confirm saving the current strategy. Confirm saving the current trade settings. So if you want to save it, then you click on confirm. So after you are done, we have the strategy mode. We've already explained the sell, the buy. So the next one, we have the strategy mode. Now, when it comes to the strategy mode, they said after the fourth margin calls, you may only switch between sub-in mode and sub-in real-time settlement. You cannot switch to or from the whole warehouse mode. So this is a common thing you need to understand. So after the fourth call, they said you may only switch between sub-in mode and sub-in real-time settlement. So while using sub-in mode, profit will only be shown after all positions are closed. So what it simply means is this: we have three different strategy mode here. We have three different strategy mode: the whole warehouse, sub-in mode, and sub-in mode real-time settlement, right? So basically, to the layman's understanding, the sub-in mode real-time settlement. Let me take the whole warehouse mode. The work of the whole warehouse mode is simple. It buy assets in bulk from the first call to the fourth call, right? And then also we have the sub-in mode and then the sub-in mode real-time settlement. That is, it buy from the fifth call to infinity. Both buy from the fifth call to infinity. The difference has been identified here. They said when you are using sub-in mode, profits only be shown after all positions are closed. So when all the trade is closed, your profit will be shown. Why? Because with the sub-in mode, it buy the assets also in batches, and after buying them, it distributes the profits gain into the market to ensure the average price is drawn closer to the current price. In as much as that, the sub-in mode real-time settlement, the work it does is that it also buy assets from the fifth call to infinity, but it generates the profit for you, it generates the profit for the trader, right? So whilst when you are using the sub-in mode, the profits will only be given, or you will earn the profits after all positions are closed. With the sub-in mode real-time settlement, you can earn the position with time, so far as each asset is being bought with time, and then also you generate the profits, right? So that is how the sub-in mode real-time settlement works. So you come here, if you want to use the sub-in whole warehouse mode, you tap on it, whole warehouse mode. If you want to use the sub-in mode, you tap on it. If you want to use the real-time settlement, you tap on it. Now, someone may ask, so which one is the best? Which one is the best? Oh, where am I? Which one is the best? My co-host, do something. Prevent me from unsharing or unshare, and then let me reshare again. It seems I don't know what's happening here. Help me unshare. I want to stop sharing. Very good. Thank you. Okay. All right. Thank you. Okay. So let's proceed. Let's proceed. Now, which one is the best? They are all good. I never choose something over the other. But when it comes to business, now there are two forms of business personalities or two forms of people in each business. There are people who want fast sales, and there are people who also want good sales but more profit, but more profit. So they don't care how long it will take them, provided there is good sales and they will make more profit, they are okay. And there are other people too who goes into market, they don't care much. All what they want is their goods should be out of the system so that they can go for another one, right? So that is the difference. So if you are the type you want to think of how fast you can get out of the market, then maybe sub-in mode is for you. If you are also the type you also want to think of how best you can make more profit, then real-time settlement is for you. That does not mean that real-time settlement does not come get you out of the market very fast. You get out of the market very fast, but not as compared to sub-in mode real-time settlement, because that profit is used to ensure that you can get out, right? But then over here, the profit is given to you directly, right? So if you want more profit, then you choose sub-in mode real-time settlement, then you confirm. After confirming, you click on activate. After confirming, you click on activate, then you activate your trade. Very short and simple, then you go your way. Very short and simple, then you go your way. The next thing is get back to the futures market. You get back to the futures market. Now, just as we've this is for sports. And also on the futures market, the same scenario works here. On the futures market, the same scenario works here. But what makes the difference is simple. Over here, too, you click on create. Just click on create. So after clicking on create, automatically on futures, it uses martingale. Listen, on futures, it uses martingale straight away. So it doesn't use both spots, martingale and then grid, but it uses only martingale. So on futures, you choose martingale straight away. You come here, we have long and then short. Long and then short. When we talk of long, it simply means the trader is deciding and analyzing the market to go on uptrend. So looking at this particular chart, you see this is our direction. This is the direction. What's happening? And co-host, please unshare this thing for me again. I don't know what's the actual problem here. Who is that? Is your co-host available? Please unshare the thing for me again. Okay, thank you. Yes. Okay, let's proceed. Good, good. Let's flow. Now, getting back here, you realize that we said there's the direction. And this direction simply means you are expecting the price to go up. Now, if someone is also trading and then the person chooses this direction, it simply means that person is also expecting the price to go down. That is to say short. And then the person expecting the price to go up will say long. So when it comes to trading on the futures market, it's two things. There are two traders. One who is seeing the market or who is observing the market to go up, and one who is observing the market to go down. right? So if I'm observing and expecting the market to go up, I'll go on long. And if I'm expecting the price to go down, I'll go on short. That is the futures trading, which simply means in futures trading, you can trade on both directions. You can trade on long to make profit, and you can also trade on short to make profit. So when it comes to trading on the futures market, I want you to understand, despite the challenges involved in the futures market, look, we can trade on all markets, because market does not only rise, it also falls. On a spot market, when the market is dropping, if you don't have more capital to open margin calls, that is to say apply dollar cost averaging as we've done or as we've stated this morning, you wouldn't be able to make profits. But on the futures market, even if you have less capital and it happens that always the market keeps dipping, you can be making profits on the dip because you short the market. If you understand that, give me one. Give me one. So over here in the futures trading, you can here click on short or long based on the direction you want to choose. So let's assume you click on short. Now after clicking on short, you come here, you have trade settings. You have trade settings, right? We've already explained what you mean by manually create and then also smart create. So you come here, you click on manually create. Manually create. Let me see if my audience are following. Let me see if my audience are following. Let me see if my audience are following. Okay, okay. Very good. Very good. Very good. Yeah, awesome and good to go. Yeah, that's awesome and good to go. Very good. So over here, you tap on manually create. What makes the difference between the spot and the futures market is this simple. The difference is this so simple that now on the spot market, we saw the first buying amount and we are just to enter $32. But over here, we are not seeing the same thing. Look at it. We are not seeing the same thing. We are seeing this 222.7 algo and then 5 USDT. Now they are not the same. They are not the same. What it means is that 22 algo, 22.7 algo, 22.7 algo is equal to 5.0098 USDT. So the equivalent amount of USDT, the equivalent amount of 22 algo is 5 USDT, right? Just as one Bitcoin is equivalent to 125,000 US dollars. That is the exact thing that we are seeing here. So 22 algo, 22.7 algo is equivalent to 5.0098 USDT, which simply means if we want more algo, we should take our time to understand how we can do the calculation, right? So let's assume I want more algo. That simply means I should understand how to calculate for the price of USDT. First, before I'll be able to do that, now I need to first identify the leverage I want to use. Since the futures market is a contract market based on leverage, since the futures market is a contract market based on leverage, I have to come here. This is leverage. When we say leverage, that is, let's assume I have $20 that I want to use to trade. Now, I can borrow money to add up to this $20. I can borrow $2 or two times of this $20. I can borrow five times of this $20. I can borrow 10 times of this $20 or even 15 times of this $20. So which simply means I can do this and see and see and see. So over here, 20, 20, 20, 20. Now, 2 times 20 will give me how much? 40. It simply means I can use my $20 to borrow $40 to get $40 to trade. Over here, 5 times 20 give me 100. So I can use my $20 to get $100 to trade. And then 10 times 20 will give me how much? 200. So I can use my $20 to get $200 and then also One 15 times 20 will give me how much? Is it 150? Right? Very good. So in this case, it's sorry, 250. If I'm right, if I'm right, let me see. I don't normally use my brain too much these days. So 15 times 20, that's 300 rather. Oh, that's great. Then I'm far behind. I'm far behind knowledge. I'm far behind knowledge. Okay, so 300. 300. Right? Okay. Now let's proceed 300. Okay, so it simply means that over here using our leverage, we are using this little capital of $20 to be gaining good capital to trade. That is the meaning of leverage. So you come here, if I want to use more capital, if I want more leverage, I should increase my leverage multiple. So let's assume I come here, I enter 10x, 10. That simply means with my capital, I want to use 10, right? Then all these values remain the same. All these values remain as the spot. All these remain as the spot. All these remain as a spot. Over here, I choose based on the take profit I want to measure, just as we did on the spot. So what makes the difference is this value. What makes the difference is this leverage. So now I have to come here, identify the amount of money that I want to use to trade. So 22.7 divided by 5.0098. So let's come here. Let's use the calculator. 22.7 22.7 divided by 5.0098 times 10 times 20 times 10 times or times 20, which is going to give me 906. So it simply means 906 algo will give me how much? Let's see. 906 algo. Let me see. Sorry. 906 algo will give me. So if I want 100 USDT, it simply means 906 or 907 algo will give me 200 USDT. So that is $20. $20. Mind you, my capital is 20 and I'm using 10, which is going to give me 200. 200. So if I want $200, that is going to give me 220 times what? 10. It's going to give me 200. So 900 algo. 907 algo will give me 200 USDT. So I have my 200 USDT here. Over here in my exchange, it simply means I'm using just $20. In my exchange, I'm using just $20. If you understand that, give me one in the chat. If you understand that, give me one in the chat. If you understand, give me one in the chat. So what makes the difference between the spot and the futures market is my calculation. It's my what? Calculation. If you understand that, give me one. 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 Or I'm here alone. Am I here alone? Am I here alone? Someone is saying not clear. Am I here alone? Let me see. Okay. One. Not clear. Not clear. Okay, repeat. 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 Now, what we are saying is this. What we are saying is this. If you look at this particular trade as an example, let me clean all this thing. Just as we did the calculation for the spots, okay, we did everything for the spots. What makes the slight difference between the spot and the futures market is the leverage. Leverage. Leverage, okay, or leverage. So our leverage is what makes the difference. So we said 907 algo is equivalent to 200 USDT. How did we manage to get the 900 USDT? Sorry, 200 USDT as 900 algo. So getting back here, let me go back. Let's get a new asset. Let's get a new asset, AP3I, API3 or whatever. So create trade settings, manually create. Now they are saying the language is this. The language is this. This is the language. 6.4 API3 is equivalent to 5.0027 or 5.0227. Okay. Now we want to use a leverage of our capital is $10. We want to use $10 as our first buying amount. If we want to use $10, if we want to expose $10 to this particular trade, that simply means it's going to be 6.4 divided by 5.0227 times our leverage, which is 10, times the money we want to use to trade, which is also 10. Do you get it? So 6.4, that is the number of algo divided by the amount of USDT times our capital times the leverage. So over here, when it gets here, you take a calculator, 6.4 divided by 5.0227 times 10 times 10, where 10 is our leverage, 10 is our capital. So 127. Let's look at it. 127. So it simply means 127 algo, sorry, AP3I. 127 or possible 128 will give us 100. Okay, if we want 100 USDT, that is 100, which is to say $10. $10. It simply means over here it's going to be 128. And how did we do that? We divided the 6.4 by 5.227 times the leverage times the capital, which gave us 100 USDT. If not, listen, if you are not able to do this right, in your exchange, you wouldn't get the exact profit you are supposed to get. So, which simply means if you want to use $1 to trade, or let's say $2 to trade, it's going to be 6.4. Listen, if you want to use $2 as our first buying amount, it's going to be 6.4 divided by 5.0227 times 10 times 2. Do you get it? Where 2 is our actual capital, which is our original money. So let's do that calculation and see. 6.4 divided by 5.0227 times 10 times 2, which is going to give us 25 or 26. So let's enter 26 there and see. 26, which is going to give us 20. It simply means we are using $2. It simply means we are using $2. It simply means we are using just $2 as our first buy-in amount. As our first buy-in amount. So just $2. If you understand, give me one. If you understand, give me one. If you understand now, give me one. If you understand, give me one. Give me one. If you understand, give me one. Very good. Very good. Very good. Let's proceed. Let me see. I've seen someone saying something. Okay, let me see. Check your battery. Hey, kindly come again on the calculation. So calculation of first buy amount, not very clear, please. Is this clear now? Is this clear? Yeah, my battery is going down. I just saw it. Battery is going down. I just saw it. Oh my goodness. Yes, let's see if we can wrap up. Let's see if we can wrap up. Let's see if we can wrap up. So over here, repeating again, the first buying amount is the amount of money you want to expose to the market based on your capital, right? So this is based on the futures market, it is based on leverage. Now, when it comes to the rest of the setup, nothing changes, just as we do on the spot, the exact thing, right? So nothing changes here. The remain all what it matters
Este
is
no quiere tú.
when you join, mute your call. You have to mute so that you wouldn't distract people who are learning. So now the most important thing is that you come here, you check the assets. You check the asset that you want to trade. Let's go back. Upon checking the asset you want to trade, let's see Astra USDT, this asset, Astra USDT, you click on create, you click on trade settings, manually create. You come here, they said, this is the value they are giving you. They said 180 Astra is equivalent to 5.01984 USDT. Now, you want to use $3 as your first buying amount. So, 3 times your 10, 10 is your leverage, which is going to give you 30. It simply means over here, you should expect to see $30 here, 30 here, not 5. 30, not 5. So, if I want to do that, I just come here, I take my calculator, 180 divided by 5.0 what? 1984. 5.01984, right? Times 10 times 3, or better still times 30. Okay, times 30, it is the same. So if you like, you can delete and then make it times 30 because you've already done the multiple. So times 30, which is the same, which is going to give me 1075 or 1076. So let's look at it. 1076. 1076, which is going to give me 30. So it simply means when I see 30 here, that is $3. When I see 30 here, I mean $3. When I see 30 here, I mean $3. Right? When I see 30 here, I mean three what? $3. So wherever I see 30, I mean $3. In my exchange, it's going to be $3, and over here, it's going to be 30. If the message is home, give me one. If the message is home, give me one. If the message is home, give me one. Okay, question. Okay, okay. So if you are to do all this calculation for the futures first buying computation, what then is the role of the quantitative robot of RoyalQ, please? I guess I've answered this question. I guess I've answered this question. Huh? And how long will it take you to do this? I guess I've answered this question. All right. Now you have your money. Does the bot have your money? Listen, we started, I made it clear to you that you have to decide on the money to use. The board does not make decision for you. Even on ChatGTP, whatever you want to ask, does ChatGTP provide solution based on what you inquire, right? So the use of robot is important, right? The use of robots is important. Do not let robot turns you into robots. Robot is made by human beings, and you as human being, it is your responsibility to control robots because you created robots. You get it? So the recording version will be dropped in the chat or in the on our platform, right? The recorded version will be dropped on the platform. So always we should understand that the work of the bot is to respond to the feed, the programming that we give to the bot. So even before you set up your trading, we have the API binding. Now the API, what it seems to ask is, you choose either you want the board to withdraw money from your account, then you decide to say okay, um read and then also trade futures and sports and margin trading. So you decide on what a bot should do, right? You decide on what a bot should do or should do. You don't allow the bot to control you, right? So this is very clear, and I believe you should get it clear. All right, please, if you have any question, ask whilst I'm about to go off. So I'm about to go off. If you have any question, ask. If you have any question, ask. So I'm about to go off. If you have any question, ask. Ask your question in the next few minutes. Let me do justice to that. We spent almost 2 hours here. Spend 2 hours here, and it's enough. If you have any question, ask. We shall meet again next session. We shall meet again another time. So if you have any question, please ask your question before we bring the session to an end. If you have any question, you can feel free to ask. So let me see the measurement in the futures for the buy-in ratio. So it's two things. Either you are analyzing the signals yourself. If you are analyzing yourself, then that is when the measurement will be important. If not, if you are taking signals in a signal group, everything has been indicated already. Okay, everything has been indicated for you on what to do, and I think you get it right. Then, if you using Bybit, you send your question on our WhatsApp platform. Okay, so those of you that are using Bybit, like I said the last time, you're using Bybit, you can drop your question on the chat box. In the WhatsApp group, and we will assist you on that. Right. So I expect to do a short video on that if possible. So when will be the next session? Otherwise, thanks a lot. Okay, so that will be every Monday. We meet on Monday morning like this to discuss about trade settings. Monday morning like this, we meet to discuss about what trade settings. So get prepared every Monday. Be live here to join us on our trade settings session to enjoy this session again. Right? So go to YouTube, watch the videos there and understand the concept. If you don't understand, always there's our platform is there. We have RoyalQ Revolution 1, Revolution 2. They are all there to assist you to ensure you grow together. Ask open questions, well-meaning questions which can derive better value or valuable answers to you, the trader. Don't ask questions that may not seem to be clear, right? So that you can get good answers to your questions. So, guys, I believe you end here. If God permits, we shall meet another time. This evening, we have one session left. This evening, Coach Mo will lead us through the business presentation. And I urge you all to inform your downlines, your prospects, let them be active there so that we can all learn together. I wish you all the best in your trading journey and have a good day. Bye, 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 bye. All right.